Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class we have concluded retirement and death of a partner. So the last chapter in partnership, we have started from basic, there is partnership fundamentals, basic principles, then admission of a partner, then we gave retirement to partner, and we didn't kill. Some partners goes out because of death, isn't it? Then now we are going to close down the partnership firm. Not because of corona, it is because of some other reasons. So now, how to close a partnership firm? First of all, what is dissolution of partnership? Dissolution of partnership firm. There are two terms. One is dissolution of partnership and dissolution of partnership firm. Both are different concepts. Remember, they may ask you what is dissolution of a firm, or they may ask you what is dissolution of partnership. Totally different concepts. Don't think that both are one and the same. Let us make the meaning of dissolution first. What is dissolution? Dissolution means suspending the operations of the business permanently. We are going to close the business permanently. That means the firm which has been started under Partnership Act 1932 is going to be closed, and all the accounts are settled, all the liabilities are paid off, all the assets are realized, and the remaining amount will be shared by the partners among themselves so that the firm gets closed. So that is dissolution. Dissolution means winding up of a partnership firm. Like winding up of a company, in the same way, you are closing down the business of a partnership firm permanently is called dissolution of a firm. Dissolution of a firm. Now, moving on to when the firm gets dissolved and when the partnership gets dissolved. Let me make the meaning of both the terms very clear now. What is dissolution of partnership? Dissolution of partnership means terminating the contractual business relation by the partners. Terminating the contractual business relationship among the partners is called dissolution of partnership. One or two partners may go out of the firm, and the relation between these partners who are going out and the relation between the partners who are still there in the business, it gets terminated, but the firm will continue. Firm will continue. You know, that is the partnership can continue till there are minimum number of partners in the firm as fixed by the Partnership Act, isn't it? That is minimum number of number of members in a partnership firm is 2. So as long as there are 2 partners in the partnership firm, it can continue even though 1 or 2 partners goes out of the firm. There are 6 partners, 4 of them goes out of the business, but still the partnership can be continued. The constitution of the firm changes and not the life of the firm. Life of the firm will not come to an end. Only the constitution of the partnership changes. That is, the sharing of profits and losses, the assets and liabilities will be revalued, isn't it? You have already gone through these procedures under admission. When a partner admits, then we will prepare revaluation account to account for the changes in the values of assets and liabilities. Am I correct? And even in case of retirement, we used to prepare revaluation account to reassess the values of liabilities and to assess the values of assets. Reassess the values of assets. So, and we prepare the capital accounts and we will decide how much capital should be there in the new firm that we have already dealt with. That is dissolution of partnership. Dissolution of partnership. Firm will continue, the business will not be closed down, isn't it? But we will start the business as a fresh again. Like one partner goes out or one partner enters into the firm, we will reconstitute, isn't it, the partnership firm, and we will continue the business under the same name, So that is called dissolution of partnership. So when the contractual business relation is terminated among some of the partners and also with the firm, that amounts to dissolution of partnership. So ABC Limited, suppose ABC Limited is a firm, and there are 4 partners A, B, C and D. C and D goes out of the business, only A and B will be there in the business. Till they can continue the business. A and B very well can continue the business, but the relation among AB and CD gets terminated. The relation between ABC Limited and CD gets terminated. The relation with the firm and relation with the partners, both the partners gets terminated. That is business relation only. I am speaking about business relation. They may sit together in the evening and they may have a cup of coffee in a restaurant. That is a different issue, personal relation, isn't it? But business relation comes to an end here. So when one or more partners terminate their contractual business relation with the firm and with other partners, this is called dissolution of partnership, but the firm will continue the business. The remaining partners, as long as there are minimum number of partners as per the legal, that is a restriction, isn't it? That is minimum number of 2 partners are there, the firm can continue the business, which is called dissolution of partnership. Here the relation between AB and CD gets dissolved, closed, and the relation between ABC Limited and the partners C and D gets closed. So this is called dissolution of partnership. Now, dissolution of firm means suspending the business operations of a firm permanently. That means closing down the business permanently is called dissolution of firm. Here what happens is that the relation between all the partners with the firm and also the relation among the partners themselves, that is maybe a relation between A and B, A and C, A and D, B and C, B and D, B and A, like that. The relation between all the partners gets terminated. The business relation among all the partners gets closed, and also the business relation among the firm and the partners also gets closed, and the firm will come to an end. It is a legal process. So this is called dissolution of a firm. So you have understood the meaning of dissolution of partnership and dissolution of firm. So let us make a distinction between the two. What are the points of distinction between, that is dissolution of partnership and dissolution of firm? In board exam, they will ask you maximum 2 marks question. They will ask you 2 points of distinctions, that's all. But for your knowledge point of view, we have to analyze it. I will explain here now, and I will give you 6 or 7 points, and let us analyze what are the distinctions between dissolution of partnership and dissolution of firm. So I will make a distinction here, points of distinctions, and dissolution of firm and dissolution of partnership. What are the distinctions? Let us analyze one by one. First one is closure of business. As I already told you the meaning of dissolution of partnership and firm, there I told you whether the business gets closed, closure of firm. Whether the firm gets closed under dissolution of firm, yes. Whether the dissolution of partnership, closure of firm takes place in case of dissolution of partnership, no. Firm will continue, isn't it? As long as the minimum number of partners are there in the business, the business of the firm gets continued. So the firm will not come to an end. Closure of the firm will not take place in case of dissolution of partnership unless all the partners decide to go out. Clear? Yes. Then next point is assets and liabilities. What about assets and liabilities? Under dissolution of firm, as the firm gets closed, the business will be suspended permanently, isn't it? It will not start again. Then in case of dissolution of firm, assets and liabilities are realized. They are realized. Remember, assets and liabilities are realized means what? Assets are sold and liabilities are paid off. So firm gets closed. Here assets and liabilities are revalued. Remember, we have to prepare a realization account under dissolution of firm, and we have to prepare revaluation account under admission of a partner and retirement of a partner, or even death of a partner. If we have to prepare, isn't it? But in death of a partner, they will not ask us to prepare all the ledger accounts. Only executor's account or capital account of the deceased partner will be asked. So this question will not arise. But in case of admission retirement, we will prepare a revaluation account to assess the values of, account for the changes in the values of assets and liabilities. Am I correct? Yes. And firm continues. So this is the difference. Here we realize the assets, we sell the assets and we pay off the liabilities. But here we revalue. We will take the current values of assets and liabilities here. That's all. That's the difference. Third one is court intervention. Third one is court intervention. Whether court will interfere in the affairs of the business. Here, yes, court will interfere, because sometimes in case of compulsory dissolution, the court will give an order to close the business of the firm. Suppose the partners, they have engaged in illegal business or any business which is opposed to public policy, isn't it? Maybe that is drugs, narcotics, isn't it? If they are engaged in such business, then definitely the law will not permit it, because it is against the law of the land. Or some 2 or 3 persons, ABC, entered into a partnership business to take money from the ATM counters, isn't it? By breaking the machine and or removing the cash from the ATM machine. Do you think it is a legal business? No. So this is against the law of the land, isn't it? So that will be closed by the court. If they are not willing to close it, then definitely the court will order them to close immediately, isn't it? Because they are engaged in illegal business. As per the Partnership Act, they have to do lawful business, correct? So here the court may interfere. Here court will not interfere. It is internal, that is a process. So partners, they themselves will decide, and they will reassess the values of the liabilities, and they will revalue the assets, and they will reconstitute the firm, and they will continue the business. Then fourth one is business relationship. Business relationship. Whether there will be business relationship among the partners in case of dissolution of firm, whether the relation will continue. No, business relation will come to an end. Here it will continue. Business relationship will continue, because some of the partners, those who are remaining in the business, they will continue the business, and business relation will continue. So business relation will continue in case of dissolution of what? Partnership, and not in the firm. In case of dissolution of firm, business relation will not continue, because the firm gets closed and all the partners will go out of the firm, and firm also will get closed. Then moving on to the next point, that is preparation of accounts. What are the accounts that are prepared in case of both? Accounts prepared. In case of dissolution of partnership, we prepare, what are the accounts you have already prepared, right? Revaluation account, then capital accounts and balance sheet you will prepare, balance sheet of the new firm you will prepare, newly constituted firm, right? But here in case of dissolution of firm, you will prepare realization account. Here, realization account, here you will prepare revaluation account, remember, revaluation account. Then, what else you will prepare? You will prepare capital accounts, no doubt, capital accounts, then you will make the settlement of the amount payable to the partners or outsiders. Internal liabilities and external liabilities will be settled, isn't it? So you will prepare cash or bank account, no balance sheet, because firm got dissolved, everything has been sold, and we have to pay everything what is we are supposed to pay, isn't it? Whatever we are supposed to pay. So here we will prepare cash or bank account, no balance sheet here. And last point, scope of dissolution. Scope of dissolution. In case of dissolution of a firm, it brings the life of the firm to an end. The life of firm comes to an end. Here, firm will continue. Firm may or may not continue, isn't it? If there are no sufficient number of partners, then it will close. It gets closed automatically. Otherwise, the firm will continue after reconstitution. So that is the distinction between the dissolution of partnership and dissolution of a firm. Is it clear now? Meaning? Yes. Now, how to prepare different accounts? Let me take up the first account that is to be prepared, and how we have to pass entries. What are the entries that have to be passed? I will prepare an account, and I will show you how it is recorded in the account, wasn't it? Yes. See, I told you we will prepare realization account, right? Realization account. It is just a ledger account. The way we prepare other ledger accounts, in the same way, columns will be there, and there will be debit and credit, isn't it? So, realization account. Realization account. Let us understand it practically. Realization account. Debit credit will be there, particulars, JF, amount in rupees. That is what the columns on either side. Clear? Yes. Now, what we will do is, after opening realization, remember realization account. What is realization account? They may ask. Realization account is an account which is prepared to realize the assets and pay off the liabilities at the time of dissolution of a partnership firm. Very simple. It is an account which is prepared to realize the values of assets and to pay off the liabilities of the firm during or at the time of dissolution of a partnership firm. So they may ask, why realization account is prepared? And the question they may ask. Realization account is prepared to realize the values of assets and pay off the values of liabilities in case at the time of dissolution of a partnership firm. Same answer. See, write in a different way. That's all. Why is realization account prepared? To realize the values of assets and pay off the liabilities of the firm at the time of dissolution of a partnership firm. What is realization account? It is an account prepared to record the assets that are to be realized and to pay off the liabilities, or it is an account prepared to realize the values of assets and to pay off the liabilities of the firm in case of dissolution of a partnership firm. Almost similar answer, question is different. See, so this is what you have to do. Now, what are the entries that are to be made in case of realization account? What we have to do is, after opening the realization account, we have to record all the assets that can be sold in the market. Remember, which can be sold in the market, or money can be realized by selling it. only those assets are to be transferred to realization account. So all the assets are to be entered on the debit side. Journal entry is for transferring the assets to realization account. Journal entry is realization account debtor to sundry assets account. Realization account debtor to sundry assets account, or you can pass individual entries. In your NCERT book it is individual entries are given, otherwise you can pass to sundry assets account. Under that you can write one by one and the total can be written in outer column, but no need of preparing that in that way. Better you follow NCERT book, you just write to stock account, to debtors account, to like that, to machinery account, to furniture account, to buildings account, like that. Transfer each asset by passing a journal entry, that is realization account debtor to sundry assets account. Clear? This is the first step you have to do. So all the assets are recorded on the debit side. Then what we will do? Remember, while transferring the assets, so remember this point, while transferring the assets, you should make sure that the assets which can be sold in the market only are to be entered, or the amount which can be realized, only those assets should be entered. So cash in hand and cash at bank cannot be sold in the market. They themselves are the most liquid assets. Am I correct? Can you sell cash in hand in the market? No. Simply exchange of cash, that's all. It's not a transaction at all, isn't it? So cash in hand and cash at bank should not be transferred to realization account. Remember this point. Then, if debtors are there and if there is a provision for doubtful debts, PDD is there in the balance sheet, then what you have to do is you have to transfer the debtors at gross value. You have to transfer the debtors at gross value and not net value. Remember, whatever amount is there in inner column, that amount should be recorded here, and the PDD should be recorded on the credit side of realization account. Credit side of realization account, that is by PDD account. Whatever is there in the balance sheet as PDD should be recorded on the credit side along with other liabilities. Remember, if you forget to write the PDD on the credit side, and if you take net debtors here, still you will get correct answer. But the valuer first, they will search for this, whether PDD is transferred or not, whether gross debtors are taken or not. If it is not, then they may deduct 1 or 2 marks. Remember, your answer is correct, but still the procedure is wrong. So for violating the procedure, they may deduct 1 or 2 marks. Remember. So you should not transfer the debtors at net. Remember, should be transferred at gross and PDD on the credit side along with other liabilities. If there is no PDD, no question, isn't it? That question will not arise at all. Then next one is you have to transfer all the external liabilities. Remember, external liabilities. What are external liabilities? The liabilities which we are supposed to pay to the outsiders, not to the insiders. So what are internal liabilities then? Capital accounts of the partners, any accumulated profits or reserves appearing in the balance sheet, or any accumulated losses appearing on the asset side of the balance sheet. Those things should not be transferred to realization account. While transferring the assets also, you should not transfer what? The profit and loss account, accumulated loss appearing on the asset side of the balance sheet. And on the credit side, you should not transfer anything appears on the liability side, like accumulated profits, accumulated reserves, isn't it? Reserve fund, general reserve, or anything for that matter which is belonging to the partners should not be transferred. And again, if there is a partner's loan is there, A and B are partners and they are dissolving the firm, and B's loan account is there on the liability side. B advanced loan to the firm. that also should not be transferred to realization. You should not enter here along with liabilities. You have to transfer only external liabilities like bank overdraft, creditors, bills payable, isn't it? These only should be entered. Partners loan should not be entered. And capital balances, that is also partners amount. So internal liability in the sense which is payable to the partners should not be recorded, should not be transferred to realization account. So you will transfer only creditors, bills payable, bank overdraft and any other external liabilities to the credit side of realization account. That part is done. Then what will you do? What is the next step? Next step is you have to sell these assets. You have recorded all the assets which are there to sell. Now you will proceed to sell. Most of the times they will inform in the problem itself. In the adjustment part they will sell, stock is sold for, stock realized for, debtors realized, furniture realized, machinery realized. They will give you instruction in the problem at what price these assets were sold. Entry is when you sell the assets, cash comes in. Am I correct? Isn't it? Increase in the asset. Cash or bank is an asset. Increase in the asset comes in. So increases, isn't it? Increase in the asset, debit. Am I correct? So cash or bank account debtor to realization account. Cash or bank account debtor to realization account. So in realization account you will enter on the credit side by cash or bank. Cash or bank. That is what you will do. Then you will record all the assets here which were sold. And while selling the assets, remember any asset, we will bifurcate the assets into two categories, tangible and intangible. What are the intangible assets? Which cannot be seen or touched, but it has a value, isn't it? Like goodwill, patent, trademarks, copyright. Goodwill, patents, trademark, copyright. These are intangible assets which cannot be seen or touched, isn't it? If such assets are there in the balance sheet, which are called intangible assets, you must transfer it to realization account. While transferring at the beginning, you must transfer it to realization account, and while selling the assets, while realizing the assets, you will enter on the credit side by bank, assets realized. You will write one by one all the assets which were sold as given in the problem, instruction given in the problem, isn't it? Then, if nothing is mentioned regarding the sale of intangible asset, suppose goodwill is there in the balance sheet, you have transferred goodwill here. These are the saleable assets. But while giving the instruction in the adjustment part, they didn't tell anything regarding goodwill. They didn't tell anything regarding goodwill, regarding the sale of goodwill. So, if nothing is mentioned regarding intangible assets, you have to treat it as it has no value. And here you should not enter. You should not realize it. While recording the sale value of the assets by bank, you should not record goodwill here. But if it is a tangible asset like maybe debtors, stock, or fixed assets like furniture, isn't it? All these are tangible assets. So furniture is there in the balance sheet, you have transferred it to realization account on the debit side, but nothing is mentioned in the adjustment part as being sold. They didn't tell anything regarding the sale of furniture. Then what you will do? You have to record here as being sold. You have to assume that as it is a tangible asset, is that it has been sold. And what value you will take? You will take the balance sheet value. Whatever balance sheet value is given in the problem, in the balance sheet, furniture is given as 10,000. You will record same amount here. You will write furniture 10,000 and you will add it to the total value of assets realized. That is what you have to do. Clear? Understood this? By solving the problem, it will be more clear. Now, just I am giving an idea how to prepare it. Clear? Then, whether it is mentioned in the problem or not. If it is mentioned, fine. Otherwise also you have to sell these assets. You have to make payment to the liabilities. You have to make payment to the liabilities. Creditors bills payable you have recorded here as liabilities, but nothing is mentioned in the problem that it is being that is paid, isn't it? Nothing is mentioned regarding payment of liabilities. You have to enter here to bank, liabilities paid. You have to record both or how many liabilities are there, whatever liabilities are there, you should record here and you have to make payment to them. Remember, whether it is mentioned or not, you must make payment. Clear? It is implied. Done. Then realization expenses may be there. For doing all this work, selling the assets and all these things, you may incur some that is expenses. Or you have appointed someone to sell the assets and you gave some commission to that person. So it will come under that is realization expenses, isn't it? So or transportation expenses of the assets, isn't it? So realization expenses. So when you incur realization expenses, cash goes out of the business. So realization account debtor to bank account, cash decreases, bank balance decreases when you make payment, isn't it? Decrease in the asset, value of asset is credit, right? So realization account debtor to bank account. So you will enter on the debit side to bank expense or realization, you will enter the M. That is what you will do. Realization expenses. Then any asset taken over by a partner. Any asset taken over by a partner, what you will do is you will record the partner's name here. Instead of, what you will do is while selling the asset, you will not record there as being sold. You will suppose furniture is taken over by Mr. A. You will not record here. Furniture you will transfer at the beginning, but while selling the furniture assets, you will not enter furniture here. It is taken over by partner. So you will give debit to partner's capital account. By A's capital account, furniture taken over. Journal entry is concerned partners capital account debtor to realization account. Maybe a question for 2 marks. They will ask these entries. In realization, mostly they will ask you 2 marks practical question rather than theory question. Past journal entry for assets taken over by a partner, past journal entry for realization expenses paid by the firm, past journal entry for liability taken over by a partner, like that. So you have to write concerned partners capital account debtor. Don't write partners capital account, or if you write like this, then answer is half. They will not give you full marks. They will give you 1 instead of 2. With the narration. When they ask you a journal entry to pass, they will ask you to pass a journal entry, then you must write the journal entry with narration, remember, with narration. Otherwise, you will lose 1 mark. They will give you only 1 mark, remember. So, you will write here what? By A's capital account, furniture taken over. If creditors are taken over by a partner, meaning is the firm was supposed to pay 10,000 to the creditors. But now a partner has agreed to make payment of the amount payable to the creditors. Then what happens? Then you have to pass journal entry, because the partner has accepted to make payment. So you just give credit to partner's capital account, that is realization account debtor to A's capital account, liability taken over, creditors taken over. That is the entry you have to pass. And remember, while making the payment to creditors, you should not make payment to the creditors. And straight away you have to pass entry Mr. A's capital account to A's capital account, creditors taken over. That is the entry you have to pass. After making all these things, you have to close the account, see which side is greater. Same thing, whatever you did under revaluation, same thing you have to do here, and you have to see which side is greater. If credit side is greater, if the total of credit side is greater than the total of debit side, it means profit. It means profit on realization. transfer it to all the partners' capital accounts in their old profit sharing ratio. Remember, in case of realization, there are no different ratios like old ratio, new ratio, gain ratio, sacrifice, nothing is there. Only one ratio will be there. It will be given in the problem. If it is not given, you know it very well. If the ratios are not given, what do you have to do? We have to treat it as equal proportion. Wasn't it? We have to distribute it among the partners in equal proportions. If 3 partners are there, 1/3, 1/3, 1/3. If 2 are there, 1/2, 1/2 and 1/2. Isn't it like that? We have to distribute it among the partners. Profit on realization. If the debit side total is greater than the total of credit side, this side is greater than that side, that means there is a loss. So, by all partners capital account, loss on realization, balancing figure, isn't it? That is what you have to write and distribute among the partners in their profit sharing ratio. So, your realization account is done. One part is done. Almost 40 to 50% marks will be awarded to realization account, because this is the most important account in case of dissolution. In case of admission retirement, revaluation account will have only 3 marks. Capital account will have maybe 4 or 5 marks, like that. Balance sheet again 4 or 5 marks. In that way they will distribute. Mostly 3 plus 5 plus 4, like that they will distribute. In case of 4 plus 5, 9 plus 3, 12, like that. But here you will get 5 to 6 marks for realization account and remaining for your bank account. Bank account mostly 2 marks will be there and remaining will be given for capital account. So 6 plus 5, 10 plus 2 for bank account. That's all. In that way the marks will be awarded. So this is the major one. Then what is the next step? You have to prepare combined capital accounts. Combined capital accounts. Combined capital accounts you will prepare in the same way as you did under admission and retirement. You will write the credit balance by balance brought down. You will transfer all the accumulated reserves, reserve fund or profits, isn't it, to the credit side of partners capital account, by profit and loss account, by general reserve, by reserve fund, like that. Whatever you did under admission and retirement, right? If anything appears on the asset side, profit and loss account, accumulated loss, you will debit it to partners capital account, that is partners capital account debit to profit and loss account, isn't it? Accumulated loss, you will record that. Then any assets taken over or any liability taken over by the partner will be recorded. See the realization account and pass the entry, that's all. The other side of the that is journal entry, isn't it? If it is realization account entered to AS capital account, you will enter on the credit side by realization account. If it is by AS capital account entered to realization, you will enter on the debit side of AS capital account, correct? To realization account, you will write like that. That is what you will do. Then close the account. Whatever the final balance, don't bring down. No balance carried down here, because firm is getting closed, no question of carrying forward. What you will do is, you will write the entry to cash or bank. Capital account entered to cash or bank, that is final payment made. Final payment made, that is what we will do. Then by seeing the realization account and capital account, we will prepare cash or bank account. In the same way, whatever we did under admission and retirement, if cash in hand is there, we will prepare cash account, we will pass all cash entries. If cash at bank is there, only cash at bank is there, then we will pass all bank entries and we will prepare bank account. And if both are there, then you are free to pass any entry, but either cash entries only or bank entries only you have to do, you have to pass. The other balance you have to transfer it to cash or bank, as the case may be. So that is how you will prepare. And partners loan, that should be tackled separately. You have to transfer that is a partners loan account to bank account. You have to make payment through cash or bank account, not through your realization or capital accounts. Remember, it will find a place only in the cash or bank account, not in any other place. So, I will take up the crucial items, points to be remembered while preparing that is ledger accounts. I will take up in the next class. Write down assignment. What is realization account? What is realization account? Submit the assignment on time. Thank you for watching this video. Thank you.